markets will be very closely watching negotiations, retaliations and confrontations, and all of those are going to lead to heightened geopolitical and market volatility.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
So the data calendar continues thick and fast. What are we looking out for in the US data next week, and how are we interpreting the data against what is a very complex macro backdrop?
Yeah, absolutely. Thanks, Matt. It is a very complex macro backdrop indeed. This week exacerbated by the tariff announcements. I'm sure we'll come back to that in more detail a little bit later. But as global investors review asset allocation and risk exposures to an evolving landscape, we've certainly seen elevated volatility. Now, on the data front next week, on Tuesday, we get the NFIB Small Business Optimism Index. This has been one of the key indicators of the success of the Trump policies, and that's something that's certainly going to be watched from markets and I imagine the administration alike. On Wednesday, we get the FOMC minutes. Now, we may find that the FOMC minutes, given the extent of the announcements that we've seen this week on tariffs, are a little bit outdated, and indeed Powell's testimony into the close this week is likely to be a little bit more of a focus. We also get US CPI and PPI next Thursday and Friday, and Michigan sentiment also on Friday, the focus there being on the inflation expectations component of that. However, against the complex macro backdrop, we would expect a notable bias in the reaction function to the data, as stronger data is discounted as pre-tariff impact and weaker data gives a lower benchmark or a lower starting point for the macro evolution. Now, in addition to the data, next week also sees the start of Q1 earnings season, with JP Morgan, Wells Fargo, BlackRock and Morgan Stanley firing the starting pistol on Friday afternoon. A tough backdrop for earnings with sentiment so stressed, but equities and the data will remain a huge focal point next week.
And how about more globally? How does the global data calendar fit into the market dynamic at the moment?
Yeah, absolutely, Matt. It's a relatively quiet week for global data next week. However, we do get some notable announcements. On Monday, we get German trade balance for February and Eurozone Sentix expectations for April. That April print there going to be a big focus as it comes post the European and German fiscal boost. So certainly important to see how that's impacted sentiment there. On Tuesday, we get Australian consumer confidence. Again, another focus on global sentiment. On Wednesday, the RBNZ are expected to cut 25 to support a continued weak growth backdrop in New Zealand. So monetary policy is back in focus. On Thursday, we get China CPI and PPI, and that's going to be a big focus to see how domestic demand stabilisation is continuing despite the very high imposition of tariff rates on China this week. And then on Friday, we get UK GDP, and that's for February. And Rachel Reeves will certainly be watching that very closely after we discussed very heavily last week the narrowing fiscal headroom in the UK. We also get a number of speakers next week, and that's going to be very important to judge the change or the renewed emphasis as a function of the data evolution, but also of the tariff announcements that we've seen this week. In Europe, towards the end of March, we certainly saw more balanced rhetoric in terms of the realistic discussion around a pause at the April meeting. It'll be interesting to see if this recent tariff announcements has changed that sentiment, and certainly in addition to that, the equity sell-off. So it'll be a big focus next week on that changed monetary policy reaction function from the ECB and beyond. It's certainly going to be an interesting week from the global economy and in particular from the perspective of monetary policy conversations.
Now, while data may hold some interest for markets next week, it's clear that geopolitics and in particular Trump tariffs will dominate sentiment next week. So how are we thinking about this?
Yeah, thanks very much, Matt. And we discussed this topic in greater detail in this week's blog, but it's clear that the regime change in the global trade dynamic is a key focal point for markets at the current juncture. We have some thoughts. Firstly, that markets are trying to gauge the negative growth and positive inflation adjustments to both the US and the rest of the world of reciprocal trading arrangements. Now, against this, the questioning of US exceptionalism that we've discussed further over recent weeks has driven US equity exposure rebalancing. We may historically review the starting point of this as the DeepSeek moment. Now, together, this has seen a global asset allocators questioning both the concentration of US asset holdings and the historical performance enhancing unhedged dollar allocation alongside this against the current backdrop. Ultimately, we've seen equity unwinds and an increase in dollar hedge ratios, or a declining dollar, an unusual departure from the dollar smile framework. Now, next week, markets will be very closely watching negotiations, retaliations, and confrontations, and all of those are going to lead to heightened geopolitical and market volatility. And that's likely for us to be the dominant focus next week and likely beyond.
Absolutely, some very interesting times ahead. In the meantime, though, is it going to be an interesting weekend?
I think it might be, Matthew, exactly. We get a full Premiership schedule with Ipswich versus Wolves at the bottom and Villa versus Forest at the top. Plus we get the Manchester Derby on Sunday afternoon. Formula 1 is back with the Japanese Grand Prix from Suzuka. Norris, Verstappen and Russell, the trio to watch in this year's tournament, it seems. But for me, it's going to be all about the Masters Golf that kicks off in the middle of next week with the par 3 round on the 9th. Now we're going to see intense scrutiny, multiple hazards and some very narrow lines. Perhaps a wonderful metaphor for global markets at the moment. But come on, Rory.
Fantastic. Thank you, Neil. I'm sure there's many countries around the world wishing that Trump would play his mulligan.
Absolutely.
But thank you for joining us and for outlining your thoughts on the week ahead. I look forward to catching up with you again next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, EurizonSLJCapital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.